Hello and welcome to Business Television India. I am Muralidhar Swaminathan. We are in conversation with the Deputy Managing Director of IDBI Bank, Mr. Gurudev Yadwadkar. Mr. Yadwadkar, thanks for joining us. Welcome to the show. Your bank has been in news for good reasons, bad reasons, and the pain that the entire banking sector is going through. You have a gross NPA of roughly about 25% and net NPA of about 16%. Where exactly does the bank stand in terms of asset quality now?
See, actually, sometime in the first week of last financial year, we launched our turnaround strategy after we were put into the PCA by RBI.
Yeah.
So that turnaround strategy basically revolved around a few points. I'll just elaborate on some of them. We firstly thought that this pain point of NPAs, let us address that on a priority basis. So sometime in the month of June, we created one NPA management group. So this is basically a dedicated vertical which will deal with all the NPAs, whether it is corporate or retail. So all NPAs were housed in a particular department to have a focused approach on resolution of all these NPAs. As you rightly said that the gross NPAs are slightly below 25%, but certainly as you are aware, a major portion of that is in the corporate book.
Correct.
Almost 90% of our NPAs are in the corporate book.
Right.
And that process of resolution under NCLT is already underway for the last 9 months.
Correct.
So we are expecting that this process, which is already taken some fruition, will get concluded in the current financial year, and a substantial portion of these corporate NPAs should get resolved in the current year.
Okay. Now, see, one of the main issues which have come up in the recent months, ever since the February 12th circular issued by the RBI, is the kind of additional slippage or additional provisioning and recognition that will have to happen. Now, to what extent will that circular impact your bank? And let me read out from some of the numbers. I think there are a number of restructuring schemes that are there, of which I think yours is must be in the region of 10,000 to 12,000 crore, the S4A, SDR and others. All those things the RBI scrapped at one go. Will this have a major impact in the current quarter as well as the following quarter? And how will you tide over the additional problem that is coming up?
Yes, certainly post this February 12th circular, there will be some impact on the corporate loan book. Because whatever the cases which were there under SDR, S4A, but which were not fully implemented, actually those cases will actually only get impacted. The others which were already put in place, the entire implementation is over.
Right.
Those would remain intact. Based on the record of recovery only, they will be recognized.
Right.
But it's difficult to quantify how much quantum will be there, but there will be some impact in respect of such SDR, S4A cases, because the standstill clause has been withdrawn by RBI.
Right. But the period that the RBI is giving between the date of default and the recognition, is that a little too short, or have you looked at that aspect?
180 days period, of course, certainly looks somewhat short, but quite a few deliberations have already happened in respect of these accounts, because they were already under some of the schemes of RBI. So this will rather force all the borrowers as also the bankers to close the matters quickly. I mean, in a way, actually, it will not drag on. The resolution process will not drag on.
Yeah,
so
it will come to a good conclusion. So in fact, yesterday we were speaking to the IBA CEO, Mr. Kannan. So he was also saying that in terms of spirit of the RBI's intention, it's good, except that they were asking for some relaxation here and there, which some of our sources also say that the RBI governor is not in a mood to actually relax those norms, which in any case is good. Now, you have been with the bank for a very long time, since 1987 rather. You have seen the bank as a financial institution those days, helping growth, boosting industry, boosting investment, supporting investment. That was the need of the day those days. Now tell me and tell our viewers that, see, some of these NPAs are not something which have emerged in the last 2-3 years. Historically, how long have these NPAs been? You would have seen them evolve over a period of time. Tell me, to what extent this is a legacy issue? Which are the key sectors where this is a problem? Because this is not something which can be resolved in 1 year or so. You must have seen that one. So tell us, take us through the, I'll call it the NPA journey.
Yeah, actually, during those times when I joined in '87, actually, this used to be an apex financial institution.
Right.
It was a DFI and enjoying the apex status. So traditionally, the role of IDBI was to fund the industries, enable the economic development of the country through the industrial growth. And in line with that charter, which was given for the bank, or the institution rather, it was not a bank that point of time. The bank has really helped. You name any industry and it has not touched base with IDBI is not possible actually.
Exactly.
So, but the industry also has gone through different cycles actually.
Yeah.
So we have seen quite ups and downs. The NPAs have been there in the past as well. But certainly over a period of time, as the demand for this infrastructure funding grew, the core sector industries grew, the exposure of the bank, which has been traditionally a development financial institution, also increased. The only difference as I see that there were not many external circumstances which were affecting at that point of time.
Correct.
But now with the integration of the economy with the global economy, anything which happens or does not happen overseas also has got a cascading impact on the Indian economy.
Right.
So as a part of that, if you see during the last, say, a decade or so, that linkage with the global economy has also impacted some of the industries.
Right.
Say like, for example, steel. So whatever happens overseas or whatever happens in China or US or Europe has a direct impact on Indian steel industry. Plus, there were certain, you can say, internal policy issues, etc., which also impacted some of the industries.
Correct.
So as a combination of all these, the stress actually built up over a period of last, say, 6-7 years.
Right.
To some extent, I would say that the banking sector also was somewhat aggressive in funding different projects which came up, whether it is power or steel or road, etc. So maybe that dilution of the underwriting standards which happened from the banking sector as a whole is also to some extent responsible for this over-leveraged companies and the stressed book of the banks.
Right.
So probably that could have been, people could have been somewhat cautious at that point of time.
Right.
So that's the major issue actually.
Okay. Now, if we look at the NCLT cases, I think if you could give us some details of how many cases are in NCLT, what's the exposure and what's the kind of provision? What is your approach to NCLT? Are you going to look at maximizing value, or will you say that, look, I'll go only by the legal process to be sure that it's 100% perfect in terms of legal immunity? Because that's an issue everybody is debating. You must have been part of that one.
Right.
Binani Industries is a classic case where they want to do out-of-court settlement. They went to Supreme Court. Supreme Court said, you go back to NCLT. And the committee of lenders are saying, look, I mean, don't be in a hurry. We want a sanction from Supreme Court. It's going back and forth. But isn't the committee of lenders powerful enough to say that, look, I'm maximizing value in this? You know, can I go out of court or do I need to follow the process? What is IDBI Bank's thinking in this area? How are you approaching this kind of conflict?
See, if you talk about the NCLT, that first list and the second list, out of the first list, we have about 10 cases where about 16,000 crore of IDBI exposure is there. And these cases have been admitted.
Correct.
And in the second list, we have about 8 cases, which is about 3,500 crore of exposure. Out of the first list, as you know, quite a few cases have progressed quite a bit. Most of the cases, the bids have been received, they have been analyzed, and some of the cases, the bids have been finalized also. So there we expect that about 7,000 to 8,000 crore of NPAs should get resolved maybe in the next first half year of this current financial year.
So no, that is what you will benefit from, 7,000 to 8,000
That's right.
crore.
That's right. Out of the 16,000 crore of
so
first,
roughly 50%.
roughly 50% should get addressed in the first.
So whatever you provided for will get written back. How does it work?
To what extent there will be a write back is difficult to say, because it depends upon the value which will be emerging out of this process. Yeah.
Oh.
Certainly, as you rightly said, every lender would like to maximize the value and would not like to have liquidation. But my sense is that EPC companies will have some pain, because typically in EPC there is not much of asset value. The value is basically in the contracts or the pre-qualification rights which they enjoy. So that will be missing in EPC companies.
Okay. When let's assume that some of these cases get resolved. This is a process and technical question for the clarification of our viewers. If NCLT says, okay, I give stamp of approval in a particular case and you can go ahead and resolve, will you recognize that loan as a good loan from the day NCLT gives the stamp of approval, or will you wait for the first installment to come back? What is the process there?
Of course, it's a technical point. Here we will have to go by the RBI guidelines, because NCLT approval will also come with certain conditionalities or the preconditions to be complied with by the different stakeholders. And as RBI in this recent circular has said that any resolution process should get reflected in the books of the banks. So we will have to implement that entire scheme for a particular company. All the lenders will have to put the entire scheme, including the security creation. So if anything of modification of security, etc., is involved in a particular scheme of NCLT, that will have to be totally implemented by the banks in toto and by all the stakeholders. So if something is to be complied with by the new promoter, that also will have to be complied with. So
it will be purely by the RBI.
Yes, we'll have to go by RBI.
Very good. So which is a matter of time and process, I guess, once it's approved.
But at least we have visibility inside that something will happen now.
So if I look at that process, given that some hopes have emerged in at least in a half a dozen cases, do you see the resolution happening at the end of the first quarter, or will it go on till end of first half?
These cases which are in the advanced stage, I think they should happen by September or so. Because as I said, that the entire implementation of the scheme also has to happen. So that requires certain time for all the lenders to really implement the scheme. So maybe by end of September, they should be put in place.
In the case of a company like ABG Shipyard, I think it's a toss between resolving with a large haircut and going into liquidation. How would you approach such cases?
See, these are typical cases. These are very high value cases. So here the interest of the new promoters, because there are hardly a few promoters who could really show interest in these type of assets. Probably the choices would be limited in these type of cases, and even the liquidation in such cases would mean a piecemeal sale, and then that could, anybody's guess could be there for how much value you can realize through such piecemeal sale. So it's better to go by the limited interest which is available from this thing for such type of assets.
Okay, now let me shift focus to a very important part of your turnaround strategy, which you have been aggressively pursuing in the last few months, is the sale of non-core assets. Take our viewers through what exactly you have done, what is the target there, to what extent will it help shore up your capital or provide against
in line with the Government of India guidelines or the directions that the bankers should actually divest their non-core investment and non-core, or rather not optimally utilize the other real estate assets. We took up that exercise with the approval of the board, and during the first 9 months actually we sold about 2,100 odd crore of our non-core investments. This included investments in SIDBI, CCIL, so these partly in NSC. So these type of divestments which we did. In the Q4 also we did some divestment, like NSDL e-governance we were holding 30% shares. Then National Stock Exchange also about 0.5% we sold in the last quarter. So on and all, maybe roughly in the range of about 3,400 crore we would have sold in the entire 17-18. We also reviewed what are the real estate assets which were suboptimally utilized. So that also we identified, took approval from the board and initiated the process. As you know, some of the deals have already fructified.
Yeah, one is the latest is SEBI.
Latest is, our BKC office, we sold it to SEBI. So that was one major.
It's a prime property.
Yeah, it's a prime property, but it was, as I said, almost 30 to 35% utilized.
Okay.
So whatever the small area which we require in the form of, say, currency chest or our data center site is there, and one retail branch is there, that we will retain on a lease basis.
Plus technology is taking care of most of it. You don't need to invest it. Yeah. There is a conflict of what to say, it will not be interest, conflict of issues here, I would say, if I can put it rightly. Some of these assets are good assets. They are not bad, and they are growing businesses. Stock exchange business is growing, insurance is growing. Even SIDBI, for that matter, is a very good property, given the focus on SME loans. That's where the growth is coming. This is a problem. It's not just IDBI who is facing this. In fact, I think even Canara Bank's attempt to sell Canfin homes, they suddenly realize that, look, it's below the market value. They will sell Canfin homes and then they will go back and lend to housing. So this non-core assets, the approach there itself is a bit of a problem, because it might be non-core, but they are good assets.
You are right, actually. See, these have been traditionally our strategic investments, actually, because as you know, as a part of that charter, the IDBI was mandated to develop the financial infrastructure of the country also.
Correct.
So as a part of that, IDBI was the promoter of all these NSDL e-governance,
exactly.
NAC for that matter, CCIL. So, but even SIDBI was a department of IDBI at that point of time.
Exactly.
But we have nurtured this investment for the last 2-3 decades, actually. But any such strategic investment, ultimately it is done with a view to realize the value.
Absolutely.
And time is of the essence. So now this is the time when we need to realize that value.
And make use of them.
Make use of that. So probably left to ourselves, we would not have liked to sell it now.
Right.
Maybe once the upturn is there and the full value is realized, but there is a need today, so I need to take that call and then try to run the process of divesting.
There are many moving parts in this exercise to turn around and emerge stronger. On the one hand, you're looking at ensuring that NPAs don't grow further. I'm sure you would have put in place risk management systems and all. Tell me, what is your business has suffered because your corporate loan book, I think, shrank. It grew less by, there was a negative growth of 13-14%, which is the case with most public sector banks. What is your business growth strategy in terms of credit growth over the next, assuming that in the next 6 to 9 months you will be in a better position to come back into business the way you were? Big corporate projects, infrastructure projects, SME loans, retail. Retail you have been aggressively pushing for that. What kind of portfolio will you look at? How will you, when and how will you see this strategy taking off?
Yeah, actually we have decided to rebalance the portfolio between corporate and the retail.
Right.
And as a part of that, the corporate loan book, as you rightly pointed out, has started coming down. In fact, it was at about 62% or so as of March 17, which has already come down to about 58% as of December 17. And going forward also, that trend should continue. And during the last 9 months, up to December, I can share the numbers, we have grown the retail book by about 9.5%.
Right.
In fact, in Q4, the rate of growth was also accelerated. So it should be in the range of about 14 to 15%.
You said that you've created a vertical within IDBI to handle all these NPA problems. At a macro level, at one point there was talk of a bad loan bank. Now, within your organization, is it possible for you to say, look, I'm going to take this very bad and sick assets and put them separately, hive them off, and focus only on my good business, good asset, and I'll grow stronger. Maybe create a subsidiary, where you say, I'm going to put all my junk there. We will take care of that. as a separate company, whether that is allowed legally, that we need to figure out. Some such major, see this small band-aids that we are doing is not going to help, you know that very well. So would you look at, or have you discussed the possibility of taking a major call and saying that, look, now I will take off by reducing the size, putting all the bad assets in a junk, in the loft, and say, let's deal with this later, and start on a different and cleaner slate. Is there any such thinking?
This technically it's a good idea actually, but there are two issues to it. One is that you can say IDBI is not really an insulated entity so far as this
Correct.
NPA stock is concerned.
Correct.
So you know that there are quite a few other banks because it's a part of the system. So the question is that even if I decide to, you can say, carve out that NPA book somewhere and try to sell it off, I am not in a position to find how many buyers are there in the market. The ARCs have their own capital constraint.
Exactly.
The other banks are already, you can say, suffering from the same or the similar lot of NPAs. There are a handful of few banks which will be willing to take or have the capacity to take these NPAs.
Right.
The second point will be what value they will be willing to give, because then it will go as a distress sale. And if it is a distress sale, I would need to make the balance provision in respect of that. So that will again require the capital. So I think that that much of capital may not be forthcoming either internally or from the government.
Right.
So while we had some thinking on these lines, but then when we found that if it is not workable, not worth pursuing it actually.
Yeah, I think if you could take our viewers through how your operating profit has been moving and to what extent you are going to rely on it over the next few quarters, you know, in terms of contributing and helping, especially in the light that, you know, there are some areas which are highly competitive. Retail lending has become highly competitive. Everybody wants to get into that one. How is your operating profit outlook, existing and outlook looks like?
Yeah, actually this was also part of our turnaround strategy, where we thought that let us focus on improving the operating profit or the operational efficiency. So towards that also we had initiated quite a few measures. Some of them were that we consciously reduced our interest expenses.
Okay.
In fact, we had a huge chunk of bulk deposits which were high cost deposits. So during the first 9 months, actually, we repriced our almost about 25,000 crore of deposits at a low rate of interest.
Okay.
So our interest cost has significantly come down. Obviously, from January onwards, the hardening of yield curve has started. So that's a different part.
Yeah.
We also, you know that towards interest expenses, we have prematurely paid our 81 bonds.
Okay.
5,000 crore of 81 bonds we paid off 31st March 2018.
Okay.
That will actually pave the way for interest saving of about 550 crore in the 18-19.
Right.
We have also identified some of the senior bonds which are carrying a very high rate of interest. So that also will be refinancing through other softer interest rate, maybe some refinance, etc. So we are taking care of the interest expenses.
Right.
We also initiated quite a few measures for reducing the operating cost, because we analyzed each of the operating cost element and found that there is scope for rationalizing this cost, which also started reflecting in Q3 onwards. I mean, some examples are like our outbound sales team. So we had significant expense happening on that part. So we thought that let us rationalize that team without affecting the, you can say, the performance, business performance.
Yeah.
We also rationalize some of the, you can say, higher lease rental branches, because or some back offices were there in the prime area of the city. So for a back office, it need not be in the prime area. It could be in the somewhat distant location in the city. So that type of rationalization we have done, and we have reduced the outgo on account of the lease rentals.
Sure.
So these measures which we have already outlined, they because 17-18 only a part of that benefit could come.
Exactly.
They could be implemented only from September onwards.
Right. The full benefits
will come in 18-19.
18-19.
So OP should look good as far as the going quarters are concerned. Provisioning, that is below the line items, certainly will have some impact.
So, but your the issue here is your net interest margin. At the end of the day, again, it's going to be a function of liability cost and what you're going to charge. Are there any big gains from this relief that is coming from the MTM losses amortization from the government?
Yeah, I think after this announcement, the yields have softened, but of course some again hardening has happened.
Hardened in the last 2 weeks.
But that's only a phasing out of the provision actually. Okay, it gives us some relief in the one quarter vis-a-vis the other quarter actually. So we'll have to make it provision over 4 quarters going forward. But we are actually activating our treasury.
Sure.
So we have already brought back the earlier, you can say, officers who were experienced in treasury.
Right.
And in the last 6-7 months, we have put them back into treasury. So we have been consciously churning the portfolio and trying to see that we not only have good interest income out of treasury, but also treasury gains are also there wherever possible.
Right.
Of course, this secular trend of hardening of interest rate hardly gave any choice of this, but wherever the opportunity existed because of the volatility, our people have been able to book some modest gains. Yeah.
Has anyone approached you for merger?
No, I think as we were discussing earlier, no, this is IDBI is not even a target, not even an acquirer company. So I think
I'm sure there are good assets people would be looking at.
That's right, but I think time is not ripe. Time is not ripe at this thing. I think in fact, for all the banks in the space, because they should all consolidate, be on their firm footing, and then probably one can think of some rationalization.
Okay. One last question. This is a burning issue which I can't not ask. Rather, 2-part questions to it. Yesterday, RBI imposed a fine of 3 crore on for some non-compliance. Is that a big issue, or is it a?
This basically pertains to 2016-17 inspection. So there were certain accounts which were not reckoned by us, maybe partly on account of interpretation issues, partly on account of record of recovery, etc. So on account of that, the RBI felt otherwise, and then that's why they have imposed some penalty.
Right. The last question is, fraud is something which has come along with this thing. How are you managing? Do you have any exposure to the PNB fraud? Do you expect some money to come back to you? If you could give us an update on that.
In respect of that group, we have not issued any LOU, nor have we discounted any of the LOUs. But as you rightly said, yes, the fraud is an issue which we need to take care. So we are trying to see that how technology can be used for the purpose of proactive prevention of fraud rather than being reactive in nature. So if we have some integration of the processes, the people, and then the technology, then probably and this data silos which could be existing, because one system not talking to another, that creates a space for the fraudster to play on. So that type of straight to processing, if we try to ensure, then these frauds could be probably kept under check. Right. So we should always realize that the fraudster is 2 steps ahead of you. So you will have to think more proactively and try to see that how you can take care of these steps.
Right. Mr. Yadwadkar, that was a very in-depth and insightful conversation. You gave us a picture of how we are going to turn around. All the best. Thank you so much for joining us.
Thank you. My pleasure.